You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network. Lots of options goodness on the network. Where can you find all that goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab right there, and you're off to the races. All the shows pop up on the overlay. You can dive in and download and stream till your heart's content. Got full show notes there for all of your reading and listening pleasure. So you like to follow along with the show while you're listening, you can do all of that there. So many notes coming in, hitting the website that I know there's some formatting issues in there. We're working to clean it all up for you there, listeners. So don't write in for me. I know I've seen it. We're working on it. So we're taking care of that for you. But lots of good stuff coming on the network. Of course, you can also find it iTunes, Stitcher, Aha Mobile, TuneIn, all those fun places, or via the mobile app. Available on Google Play, the iOS store, and of course, everyone's favorite, the Amazon App Store. Go ahead and grab it. I think about 5 of you have done the Amazon version. I haven't checked in a while. Maybe it's more, but nowhere near as many as the Android and the iOS versions, clearly. And joining me on the old program today, starting off with the man who is moving hither and yon all over the place. In fact, I think just about everybody on the panel is involved in some sort of real estate transaction at the moment. We'll start off with the first one, good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, how are things going, and have you settled into your new abode yet in scenic and lovely St. Charles?
No, we won't actually take possession until the 20th of July. So for now, still living in the old place, but excited about the new nonetheless.
So you got time to have just massive parties in the old place and trash it completely before you move out.
That's kind of what I'm thinking. So everyone that's listening to this show, come to... Oh, never mind.
All right. And the other person engaged in a real estate transaction, indeed to myself, though I believe he's kind of looking at his in the rear view mirror, is indeed the Rock Lobster himself, gobbling up all the land up there in the hinterlands of Maine, and I'll call it the Giovinazzi lands instead. Mr. Rock Lobster, Andrew Giovinazzi, from myriad different appearances on the old network, as well as, of course, over there at the pit. Mr. Rock Lobster, welcome back to the program, and how go your legal and, not legal, but real estate wranglings?
Actually, my real estate wranglings as of today are all completed.
Oh, well, mazel tov to you, sir.
Also, there's no more anything. Although I do notice that everybody gets a little slice out of a real estate transaction in Maine. I don't think there's a person around that has not gotten a slice of a real estate transaction here. And it's the Burt's Bees, I think, person that owns like most of the Maine hinterlands. I think they just bought the middle third of the state, like 50,000 acres or something like that. It's a pretty big chunk.
So between them and LL Bean and Ben & Jerry's, they pretty much own all of it. Or Ben & Jerry's is Vermont, excuse me.
Exactly. They own all of Vermont. And then, LL Bean and I guess the Burt's Bees people, they own the rest. of May, middle of May.
And we had our inspection today for the place, so everyone's rocking and rolling with some sort of real estate transaction. We're not doing what you guys doing. We're not rolling. We're just adding on to our position, which is, of course, all sorts of crazy. But we're doing it anyway, and it should be fun. So there we go. There's your real estate report for the beginning of the show, listeners. And now, without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
And welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's catching our eye in the broad market today. A bit of a weird one, getting that weekend back from in terms of volatility, VIX cash ticking up a wee bit, about 1/3 of a point or so, hovering over that 14 handle, so getting some of that weekend love that they may have squeezed out there on Friday. Back in, as well as most of the major indices, on ever so slight rally mode, about 1/4% in the S&P or so, a little bit less, about 1/3 out there in the Qs, and the Dow pretty much slightly unched, slightly better than unched, I should say, on the day. So not the most scintillating day. If you wanted to have your opportunity to do the old sell in May and go away, it is now gone because we are recording this on Monday, June 1st. So we now are in June. We are indeed in the teeth of the summer doldrums. So all of you out there looking for all sorts of whipsaw, crazy trading activity, you may want to dial down your expectations for a little bit. We are, of course, in the tail end of earnings. Not a heck of a lot of really big earnings yet to come here on the old calendar. Most of the big names have reported, but it doesn't mean there are no options topics catching our eye. Quite far from it, I should say. As we move on, let's start off with you, Uncle Mike. What indeed was catching your eye in this rock'em sock'em bang up day in the market?
Well, I got to yield to the. I have to yield
expect
to
no
the
less
bonds.
than 30 things from you today, sir. There's so much activity going on.
I yield to the bonds, pun intended. Bonds pulled back a little bit, so we saw that. The other interesting move that I saw initially at the open, gold had a little bit of a spike and then just kind of retreated once it popped. It didn't really stay up there for very long. It actually gave us a little bit of an opportunity to sneak a few pennies of profit on a call calendar that we put on last week on it. Aside from that, you got to search deep and wide to really find anything on my radar screen that is really, as Mr. Longo would say, lighting up the tape. The only other, I got nothing.
XLE, crude, gold, Apple. See, what did Apple do today? Oh, yeah, Apple slightly unched on the day. So, yeah, not a lot in your neck of the woods, really lighting it up from a crazy activity perspective. For the crazy activity, then we turn to the Giovinazzi lands, a.k.a. the hinterlands of Maine, Mr. Rock Lobster. In addition to all the unusual activity you were profiling for our friends over there on Options Oddities today, what was catching your eye in today's activity?
I think there was a pretty good bond sell-off. So maybe are we coming back to, this is the greatest opportunity to sell bonds in our lifetime? Maybe that's because there wasn't really any news out of Europe. Once again, the self-imposed deadlines of Greece have come and gone. And, I wonder if the EU is going to get angry enough and they're just going to say, you know what, you guys go figure it out. You have such great ideas. Sears a party. You go figure out a way to fund all the stuff that you want to give away in your country. So they might be getting close to that. So I get, June 5th, there's supposedly another payment deadline and this and that. And it is madness run amok over there. Those guys trying to run that government, and there's guys, there's no money. Start figuring other ways to make money, but borrowing it from everybody in the EU. So that, if anything, I think what that's adding to the layer of malaise over the equity market. Stocks are still at pretty much close to all-time highs. The Qs and the NASDAQ. So, I mean, there's not a lot to complain about from that point of view. I guess you're kind of riding some short-term premium if you want to make any money. But other than that, and you're collecting a dividend here and there. But it feels like all the, I'm not going to call it easy money, but like if you were looking for a lot of that upside in the broad market, I'm still like modestly bullish as far as I think the potential's still good. But as far as making those QE inspired dollars, I think I feel those dollars have all been gobbled up and consumed at this point.
Speaking of dollars being gobbled up and consumed, we have finally reached that day, Mr. Rock Lobster. It has been a long, long and lengthy process. You've been helping us profile it there for quite some time, it seems like, over there on the Options Insider. For any of you guys who've been following along with our site, or of course the Options Oddities program in particular, and indeed on the Odd Block occasionally here as well on this program, we've been talking about the long rumored song and dance going on between IBM and Altera. We go back a few months at least on the site with write-ups on just exactly what people have been up to out there, and it's been amazing to see how a lot of it, particularly in the early blush, I'm sure you recall, Andrew, a lot of it was pretty horribly wrong. People really loading up on some early call buys that didn't really pay off. And I think, as I recall, some pretty sizable verticals as well that didn't pay off. You recall all of that, Mr. Rock Lobster?
Yes, I recall there was a lot of, let's just say they got smoked out.
So we talk about here on the network all the time, size money, not always the smart money. Well, yeah, the back and forth on this deal, will they, won't they, when will it happen, will it happen? Yeah, it started off back, actually, it looks like the first big spike came in late March, actually, March 27th. That was the first rumor. Stock spiked from about the 35 or so handle all the way up to north of 44. Got about as high, hit about 45 actually, as low of 34.5 up to 45 the same day. So that's when the song and dance began. People obviously did well in that initial spike, but since then we saw people just continuing almost inexplicably to keep piling in to upside, waiting for, of course, today's day to finally happen. The stock closing today 51.68, up about 6% or about 3 handles, and it has vacillated ever since. This is kind of, one of the worst case scenarios you can have for kind of a deal like this, where people are expecting, you obviously have that big pop, and then you expect more out of it. Apparently the market did, and people were loading up on all sorts of verticals and everything, and upside calls. And of course, as we said many times on this show, when the movement doesn't happen in the very, very near term time frame, makes it hard for those trades to make money. And people were paying any amount to get into some of this upside, and we just watched it all pretty much erode away. This move started vacillating back down after the initial spike, got down into south of the 40 handle briefly again for a while there before beginning its slow, inexorable rise back up. Had a brief gap from like 43 to 46 or so, and that was kind of the big move. And then it kind of just kept moving in little fits and starts here or there, and it wasn't enough to pay for a lot of decay. So I think you just came in and bought calls, and this one you did all right. Most of the activity we profiled, I believe, actually ended up not getting the timing right on this one at all. Mr. Rock Lobster kind of just goes to show the challenge, even when you think you know something, the challenge of getting it right. We say all the time, upside calls is kind of a rough road to hoe, and I think this deal illuminates it better than any others I can think of in recent memory, with the possible exception of the Alien versus Predator AVP deal. That was a good one, too.
Yeah, the one that just smoked everybody. The Altera deal, I thought the best opportunity maybe was selling like the risk reversals and stuff, but those got crushed pretty early as well. So again, it was just a hard one, That's what but it was trading just under $35, and and it's going to go out at 34 in a couple of and I guess in a few months if it passes muster. What I'm still trying to figure out is, okay, so if Intel buys Altera and Avago buys Broadcom, who's left to buy all the other ones that are still bid up? I think that's the next question.
Yeah, there's not a lot of deep pockets left, to come in and gobble this stuff. Mike and I were saying on the last show, it's actually kind of interesting here, Andrew. If you look at some metrics, we're always joking about Uncle Mike being the resident bull here on the network. And we were saying, looking at some numbers, I'll see if I can pull them up again from last episode, but essentially the amount of M&A that's going on in the tech space these days rivals what was there right at the height of the bubble, 1999. Doesn't eclipse 2000. I believe that was the record year, $300 billion in M&A, but it was about 215 million, if I recall correctly, going on in 1990, billion going on in 1999. And I think we're on pace to perhaps, if everything holds steady this year, to beat that. So perhaps that is the final nail in the coffin of the bull market, Mr. Rock Lobster. And that's finally what you diehard fundamentalists need to really start selling this market en masse. We are back in a tech bubble.
We're in the tech bubble, but what are they paying for everything these days? That I don't think that that used to be like, okay, it was all going to be stock swaps. I'm going to swap my funny money stock with yours. Now Intel's just, they're paying cash. They're not giving anybody any stock, which is hard to believe, to be honest.
Yeah, what fun is that? Why pay for something? Why not give them your paper? They don't hedge it. Both deals, are worth zero in a few years. It's great for everybody.
So they're looking at something that's going to make money from their money, and it's a totally different kind of deal making than we saw before, I think, anyway. So these guys are looking to grow and put chips everywhere. So as far as I still think the Qs, even though they're at these high prices, I think as far as valuation goes, is the valuations, they're a little expensive, but historically they're not expensive. They're a little more expensive than they have been in the past, but they're nothing close to any what we'll call bubble levels. So, and I think at this point with interest rates this low, companies are looking for, cheap ways to grow. And I think overall that probably makes the two-stock case look a little better. So I'm probably giving them I'm giving them a little here on this one.
Yeah, you do tend to. I think you mind your P's and Q's and do your due diligence a little bit more when you're spending cash, when you're actually paying for something, as opposed to just slinging some stock. Oh yeah, take some of my $400 a share Yahoo, Mark Cuban. That's worth nothing in a couple of years anyway.
Exactly.
So you do look a little harder, I think, when you're actually ponying up the money up front. Speaking of kind of continuing this theme of perhaps overdone or perhaps underdone, depending on your opinion, tech potential fiascos. We have, of course, Twitter, the high-flying name that not so high-flying of late, got its wings clipped not too recently. If you're not paying attention to Twitter listeners, their last earnings announcement, the market didn't like so much. Let's just put it that way, euphemistically. It was trading around 52 or so the day of the announcement. It closed at 38, I believe, that same day, and is trading in the high 30s not that long after that. And today, closing $36.63, unched on the day today. Some people pointing out, if you are of a mind to think that perhaps this movement is overdone, and it's going to rally back hard to the upside, or perhaps there's more downside in the near future for Twitter. A few people out there in different outlets pointing out that, looking at a longer-term chart, particularly from a vol perspective out here in Twitter, some of them, their options, their premium out there, and them, their hills, might be a little bit attractive. I'm looking here at a chart myself, Mr. Rock Lobster, looking at 30-day and 60-day implied out there. 30-day obviously has come off a cliff of late. It was trading about 52 not that long ago. Now dropping down into, of course, the 30s, of course, are post-earnings, so that accounts for some of that. But, of course, also some people out there saying perhaps it's not a bad time to take a bit of a long premium-tinged flyer on Twitter if you are so inclined. Mr. Rock Lobster, did this one come up at all in any of your pit chats, any of your mentees looking there at Twitter and perhaps eyeing some deals, or I think it's still overpriced?
Oh, I think actually Twitter, I have one small story about Twitter, and it reminds me of like Google, but not quite the same, because when Eric Schmidt got the job for being the CEO in, I guess, the early 2000s, the VCs are like, okay, listen, this is going to be great. Just don't screw it up. And I have a feeling the VCs probably told the Dick Costello guy that's running Twitter right now, okay, this is going to be great. Don't screw it up. But I think Schmidt did a better job of executing than the Twitter guy's doing right now, because they've gone nowhere fast. I think it's basically Twitter's just a whole lot of potential, and the implied volatility is low, and I'm positioning for exactly that thing. So I'm just basically buying long-term juice because it's so darn cheap, and I will finance it by selling short-term stuff. and we'll see where it goes. But I everywhere there's like a Twitter hashtag this, or post it to Facebook that. I mean, those are two names that seem to be stuck now in kind of the consciousness of everywhere. Like even when you look at Vanity Fair articles, you can post what you think to Twitter. I mean, all this stuff is connected, and Twitter's part of it. So
please stop trying to inject that into the show, sir. It's too horrible for a discussion on any level.
I came into our chat room. I'm like, wait a minute.
No.
So, oh my gosh, yeah. So anyway, but be that as it may, it is the cheapest premium for the potential for the stock to move. It's just dirt cheap. So yeah.
So what happens. What you've been saying is you're the one out there seeding the internet with all these articles saying buy cheap premium in Twitter. That's you.
Exactly. So yeah, full disclosure, I own some. So if you're buying it after and it doesn't work, don't blame me, because I didn't make any money either.
You already got your run up in your Giovinazzi Rock Lobster newsletter. You bought the first 10,000 lot and let the lemmings dive in on all the rest. That's how it works, right?
Exactly. That's how we do. Although I don't know how some guys do that and sleep at night, but that's not.
They sleep on very richly feathered and upholstered beds, sir.
I guess so. In very cozy surroundings, I guess.
They have bad dreams, but they're very comfortable.
Right, but they're comfortable with their bad dreams.
Yes, exactly. All right. Well, without further ado, before we besmirch anyone else, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the show we break down the weird, the wild, the woolly, the wondrous, the whimsical paper that is lighting up the options market today. Going to kick things off with a trade I've been known to do once or twice, the old bullish risk reversal. We saw it going up today in CSX Corporation, accurately or aptly named or symboled CSX, closing today about 34 1/4, roughly unched on the day. This is the name that does fairly decent volume compared to a lot of the names we profile here on the iBlock. Does about 24,000 contracts a day, doing over 60,000, nearly 62,000 to be precise today. So a lot of love flying in for CSX, and the lion's share of that, 50-odd thousand contracts, coming in one massive risk reversal. In particular, it was the Jan 2016 31 puts going up over the Jan 2016 37 half calls, selling put, buying calls, doing all of that goodness for a nice healthy 20-cent credit. Doing it when we started profiling at 27,600 times. That seems to be the lion's share of it. Maybe a few hundred contracts on the calls more went up, but it pretty much that seems to be about the lion's share of it. So yeah, about 54,000 contracts going up in this one trade. So almost the entirety of the day's volume in this one big spread. No open interest to speak of, so there's no rolls here. There's only 100 odd contracts on the Jan 31 puts and about nearly 5,000 on the Jan 37 half call. So yeah, no open interest to speak of, but there was some stock going up here to the tune of, I believe, about 1.7 million shares going up. So it's not like our friend coming in and just establishing, looking to get long to the downside, or perhaps putting it on against an existing stock position. Looks like he did it all packaged up nice and tightly today. Mr. Rock Lobster, take us home, sir, on this funky size risk reversal here in CSX, along with some stock.
Yeah, we had 27,000. I mean, do you remember trading? How often you would see like a five-figure contract size go up?
Very infrequently. You know, once in a while you get. So I was in a pretty big name. You know, I was in the equity land. That was Intel, and you know there would be 10,000 lots every now and then. Sometimes a little bit bigger, but yeah, 27,000 on each leg. Very rarely. A few times a year, maybe. You know, earnings season, and that's really about it.
Yeah, I know. I think even in this trade that went up, I think the customer's down like, $500,000 on the marks or something like that. 200 from the marks. I had 101.7 million shares going up to 33.95. They're down $250,000 on the marks going home today. So
that'll hurt.
Apparently, if you don't have to look at your marks, you don't care. Maybe it just gets lost in the billions of dollars that they have sloshing around in the fund. But I don't think this was a bad risk reversal. I mean, it generates positive theta, and it has positive gamma. So you look at that kind of trade, I got 15,000 gamma, and I have 2,600 positive theta. You don't even get into trouble until the name really drops to like 24, 25, which looks unrealistic at this point for the rails, unless, of course, everybody just stops transporting oil over them. And it does give a reasonable run up. So I don't know. I think this is probably one of the better constructed longer-term trades we've seen. And CSX was just trading 37.5. If there's a $40 buyout, they might make a little money after, depending on what happens with volatility, because they are long a little Vega up there. So they're basically buying this to trade it looks like. Or they're rolling out of the stock and into just the straight up risk reversal edge. Maybe they took a long trip on the stock and they're getting out and, reestablishing their position. So again, you never know what they're doing, but the margin on this, just on the Reg T margin alone, is $163 million.
So small size.
Just for Reg T size, because you're short the stock. I know Reg T just doesn't, they don't recognize the fact that you're long calls against the short stock, because that doesn't matter.
That's painful. That's painful.
So I think it's all three legs separately. But not quite that much risk, not even a fraction of that risk.
You think they would favor it a little bit in case they were worried about a buyout to the upside? Maybe ratio that stock a little more, something like that. Give them a little bit more edge to the downside, upside. Clearly, they're not that concerned about it. You're like, right, or either that they're gonna babysit this one pretty tight because that's probably the lion's share of their position. So they're gonna be on this one, perhaps scalping aggressively.
Right.
But either way, yeah, interesting stuff here. Delta neutral risk reversal for some small size, a wee bit of size here.
Yeah, it's like they read Nadenberg and just went for it. But
wait a minute, this strategy on page 3 really works. Someone wrote into me recently, I forgot where it was, and said, hey, I just read Nadenberg, and this doesn't seem like it's giving me any secret inside trading strategies into the market. And I wrote back to him, I was like, that's not what it's for. It's to educate you. But apparently this guy thinks it is. He's going for it. He's taking Nadenberg and swinging for the fences. He lined up some investors, said, hey, I found this thing called Nadenberg. It's awesome. I need some money to trade this stuff.
Exactly.
This thing called skew.
It's taken over at $43. I don't think he makes any money.
Yeah, that's not so much. Maybe you want to lighten up on the stock if that's the case. Or you go heavier on the calls. If that's what you're worried about, that's what you're planning on with this. Certainly didn't structure it that way.
Right. So could be a stock replacement, and if then you get the takeout, then it looks pretty nice. But if it's just straight up, maybe they're trying to trade. They want a vehicle that trades some gamma. So in that case, you got a good trade. If it gets taken out at $42, then you got to. Unfortunately, it's not going to be as fun for them as they want.
Good stuff. We'll keep an eye on this one, listeners. It's a pretty sizable, pretty long-term. Maybe we'll give you regular updates on how our friend is doing. Obviously, we're not going to know, all the different gamma scalps and adjustments he has on there, and that's going to be where maybe the lion's share of his profits are going to come or his losses are going to come. But still, we can keep an eye on it and to see how the marks are treating him and the skew, if nothing else. As we move on to our next name of the day here, this is IAMGOLD Corp. Ticker symbol IAG. They're reputable because the name's IAMGOLD. So, of course, they're a quality name. In case our other name was a little bit too rich for your blood, this is our resident cheapie of the day, $2.02. unched on the day. And this one's great on every level. The ticker, the size, the price. In case you were concerned about that $2 stock going the way of the dodo, and you might be when it's a $2 stock, never fear, just hedge it at the $2 line. Or in this case, perhaps you roll those puts you already bought. It was, what we saw today, looked like the June SEP 2 put roll going up, paper buy-in for 20 cents. So he paid 20 cents quite a few times. Yes, total of 104,437. When we first started I'm just laughing, listeners, because all of this is just nonsense. 52,000 is when we started profiling it. The big block of 52,000 going up in 2 blocks, on the ARCA. As the day went on, 2x that, another 52,000 piling in for a total, like I said, of 104,000 and change. Open interest, surprise, surprise, on the June 2 puts, 107,000 contracts. Open interest on the SEP 2 puts, not so much. 2,400 contracts. So our friend here, Mr. Rock Lobster, really worried about all that downside here in IAMGOLD. He's like, maybe this thing isn't as reputable as I first thought. I better buy some of them there puts. Oh, wait, they're going out. I got to roll
them. Maybe they got the name wrong. Like, they thought it was IAMGOLD, but it's really IAMCrap. I don't know. So, I guess they got a reason to do it, because the problem is they rolled the June calls for not very much money. So I'm head scratching. Okay, so they're long the stock and long the puts because gold's popping. Certainly could happen. I just really don't have an answer for this one as to why you would spend so much time and money rolling these puts.
Think of that. Think of a scenario where you would think rationally in your brain, I want to hold on to this $2 garbage name, but I'm so concerned about downside that I'm willing to spend 10% of my portfolio for the next few months to hedge that said $2 name. Uncle Mike, does that make any sense to you at all? Would you ever, in any scenario, contemplate this?
It's a lot of money, and one thing that you always have to look at with the cheapies like that is the percentage of it, and for that percentage, I'd have to be very confident in my bearishness.
This might take the cake, Mr. Rob. This might be my crap trade of the week / month. maybe so far for the year. This one just rubs me all the wrong ways.
I'm trying to figure out. I kind of miss having I'm missing Alex here I wonder which ways
he would be just outraged over every facet of this trade.
He would be going sideways. So again, it's somebody might have a reason for doing it. I can't really think. If you're going to buy the $2 stock, buy the $2 stock and see what happens. Because I don't know what the chance. How much is that put going to really hedge the trade? I don't know. I just don't know.
Down below that critical 180 strike is where he's locking in all of his juice.
Yeah, they might make a dime on the put. Maybe, I guess.
This is painful on every level, this trade. That's why we call it the odd block. We should call it the pain block sometimes.
That's 100,000 times. Wow. That's what I like about it. 100,000 times.
Maybe one of my favorite trades we've ever profiled. By favorite, I mean horrible, horrible hate, least favorite, listeners. That's just, that's a great one. That's a classic. That goes in the Hall of Fame /shame.
Well, plus it hits on everywhere you like it. You got the name, you got the symbol, you got the size, you got the stock price.
Yeah, it hits all of my red flags all in one trade. Everything I would say I would never touch in a million years, all combined. Every warning sign. And combined into one trade.
It'd be funny if the commissions were like $3 a contract. Because it went up on ARCA. The Philly gives you discounts, so who knows what they do.
Yeah, they're not getting those fee caps on ARCA. Oh my God, this is getting better.
It's pretty sweet.
Wow, that's listeners. Hey, write in. Let us know why you would want to really protect that $2 stock / option for 10% of its value in just a few months. 100,000 times. That's classic quality stuff, listeners. I'm not sure if we can top that. We're going to try with our final name here. This is EVEP, EV Energy Partners, ticker symbol EVEP. This is the name that does about 1,500 contracts a day, doing about 11,000 contracts today. So not exactly as sizable as some of the other names we were just talking about. Certainly not 100,000 contracts, but still fairly decent sized paper. Let's look at what we got today really quickly. It's the July 17, Sep 20 diagonal going up. When we started profiling about 4,500 times, total about 5,000 times for 60 cents. Looks like they're actually closing out the set position because there's about 8,300 contracts there. So this is kind of a bit of a reverse roll, what we normally see. Not rolling out on the SEP, not rolling up and out on the SEP like you might normally see, but actually rolling in and down to the July's 5,000. Only 3 contracts open there. There's some size open on the 15, so about 5,000 contracts. So perhaps there's something related. Mr. Rocklops, I know not as scintillating as our last one, but what's your take on our friend here doing a bit of a reverse roll here in EVEP?
This feels like the rolling in but rolling down because the underlying just fell apart so fast. Just looking at the chart, it's probably 18 or 19 bucks, and then whatever happened, whatever that short rally in oil was, or for the energy names, it got hurt on this one. And I think they're just closing their 20s and they're just selling something near the money, and they're not expecting a whole lot of anything to happen with this name, at least through July. So they're trying to get through. And note the calls they sold are prior to the divvy. So if the divvy holds up, you might see them press that call. But for right now, they're taking they're taking the 75 cents. Gosh knows where they got in on the thing. And I think they're just kind of keep trying to generate some sort of yield out of the position.
There you go, sir. And without further ado, that will wrap up this very, very odd block. one of our better ones in a while. See, not much activity in the big, broad market, listeners, but a lot of fun stuff for us to highlight for you in the hinterlands known as the odd block. But now it's time for us to keep on rolling right on into our favorite Monday segment. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block. You guys know the drill by now. This is the portion of the show where Uncle Mike Tusaw, who's been resting his voice all show long since the beginning of the trading block, and a wee bit there in the odd block, so he's ready to go with an epic extravaganza of a strategy block, at least 15, perhaps even 20 odd minutes, myriad topics, all sorts of good stuff, perhaps a few jokes, some wit sprinkled in there as well. So without further ado, Uncle Mike rested, you are ready. It is time for some strategery. Have at it, sir. The floor is yours.
Oh man, that's quite the buildup. I don't know if I can quite swing it, but maybe I'll start off with a joke. The devil rear ends God. And then God says to the devil, Satan, I got you now. I'm going to sue you for everything you got. And then Satan looks at God and says, oh, yeah, what lawyer's going to come near you? Ba-bum. All right, so that's the joke of the day. So without further ado, what I want to discuss today is a couple months ago, Alex had said something on the show in that I can do anything with options that you can do with stock, and I can make it better. So I want to give you an example of how that can work. Let's assume for a second that all this is being done within an IRA with no taxes, because that was the one caveat that Alex did say. If there's tax issues, if there's estate planning issues, of course, that does come into play. But from just the sheer trading aspect in and of itself, what can be done with options that you can do that makes it better than stock? And I think this is especially something that really applies to that of an IRA. if you can buy and sell all you want and there's no tax issues whatsoever. So let's say that I really like XYZ stock. XYZ stock, we'll just say, is trading at $50 a share. That's what I think I always make XYZ stock trade for that matter. And with all that being said, XYZ stock is something that you like for the long term. And you're concerned that maybe in the short term it might be pulling back a little bit, or you have a lot of ideas and things that you want to be able to have some flexibility with this. So that's why you seek something in the option realm. And I want to stay fairly basic today. So instead of actually buying XYZ stock at $50 a share, you could sell the 50 put option. And with the money you take in from the 50 put option, you can simultaneously buy the 50 call option at the same expiration. Now, and let's assume that there's no dividend in XYZ stock as well to keep this simple. Now, with that being said, you pretty much have what's called a synthetic, and it's pretty much the exact same thing as just being long the stock anyway. So you might think, well, why would I do that, Mike? Why would I want to pay the extra commission to do that? I have the same risk, same reward as being in a stock, and then I got to pay for the bid-ask spread. I have to pay for commissions. Well, what's the benefit of that? Well, a couple things. Number one, with option commissions as low as they are, it might actually be cheaper to do it that way with the way that the per-contract commissions come out to in this day and age. Just kind of depends on your broker and that type of thing. But number two, you're getting some flexibility with this. So let's say, for example, that XYZ stock does go up tremendously as soon as you own the stock. Well, of course, you could actually perhaps buy a put option to protect some of the upside, or you could perhaps sell a call or put in a stop loss or something along those lines. But if you have if you have this combination in place with which I'm describing, the thing with which you can look to do is buy to close that short put option. And then you're in a position to where you have all the upside from 50 on up and none of the downside below 50 because you took the risk off the table. That's one way with which you could do it. Now, other ways with which you could do it to give yourself flexibility is, let's say that you wanted to have a better margin requirement. If that's the case, then you could then, let's say stock goes from 50 to 55. At that point, what you could do is buy the 45 put, and then for a cheaper price, of course, and then you've freed up $45 worth of capital. Remember, this is an IRA, so this is a cash secured put. This is not just a traditional short put where you can leverage it. So there's things with which you can do to have flexibility when using options in lieu of stock. Now, the other thing that you can consider doing if you want to compare an option trade to a stock trade, buy a deep in the money call. If you want to have upside on the stock and you're concerned about downside, then folks, by all means, buy the call. The call has a limited risk. Now, when I say buy the call, let's keep this relatively simple in that normally you are going to buy 100 shares of the stock, let's say, just buy one call option. Where people get into trouble with options is they're thinking, instead of buying one call to my normal expectation of getting 100 shares of stock, which is what I was thinking, I'm going to buy 4 or 5 calls, and it'll be our little secret. And you end up getting burned because it goes against you. And then what's more is as you're looking at buying that long call deep in the money, let's say, is to do something similar to owning the stock, you're thinking, well, for the same money, I can get 12 out of the money calls as opposed to 4 deep in the money calls. I think I'm going to go with the 12 out of the money calls because if this stock really runs up, I can really make a killing. And then you look at it even further saying, well, instead of going 5 months out for these calls I'm going to buy, I was going to buy 12 of them 5 months out. I could buy 25 of them 1 month out because I really think this thing's going to pop in 1 month. And, oh, man, this is going to be great. So when doing such a thing, if that's your mentality, plan on getting pounded and being another statistic in the option trading world. But the way with which you can use options is that if you can go with a 1-for-1 ratio, meaning that if you're normally going to buy 100 shares of stock, buying one call option or doing one of the option combinations or something along those lines, you have the ability to make things happen, make adjustments, and do things like what we talk about on this show all the time. And that is one to grow on for today.
Thank you for that, sir. Though I was expecting at least another 8 to 10 minutes from you, so you have to vamp for the next 8 to 10 minutes. Okay, go.
Well, let's see. Tell some more jokes, maybe. I don't know.
I'll save you from that, sir. But without further ado, let's keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. As the name implies, this is the portion of the show where we peer deep into the weeds, let you know what we're watching, what we're keeping an eye on for the rest of this trading week. In addition, I should say, to all the things we mentioned at the top of the show, like perhaps some cheap premium opportunities out there in Twitter, and of course some growing interest in the bond land, as well as some perhaps liquidity issues out there in some of those bond derivatives products. Not a heck of a lot cooking on the old earnings front. We're pretty much getting into the last trickles of the season before it all starts over again fairly soon. And of course, we do have that old market mover at the end of the week, non-farms. It kind of turned into a bit of a lame duck, a bit of a non-event. Then about a month or so ago, we saw non-farms kind of surprise everyone and move the market a little bit again. And since then, we've had one or so announcements. Since then, this will be the second, I believe, since that event. And so it'll be interesting to watch and see if people are starting to treat non-farms the way they used to and actually hedge against them, buy some vol, instead of just selling indiscriminately, even into the teeth of a non-farms announcement. Perhaps we'll start there. Mr. Rock Lobster, what do you think we'll see this week? Think people will actually give a darn about non-farms, or think we'll go back to the old way of, sell that premium on Thursday night. I don't want to hold it to the weekend.
It probably will be this one sold. I don't know how anybody can expect that the Fed is not going to do some kind of rate raising. The economy isn't great, but it's not awful. And I think just part of the whole thing is it's got to happen at some point, and now will be the time. So I think you might get a little bit more of a kick and ball between now and then, but I don't see a whole lot happening from it, to be honest, unless the number is just awful, or we could see a big surprise after kind of the slowdown over the winter. The January to March was kind of awful in general, so there could be a little bit bigger of a bounce, and they'd be like, oh, everybody saved again. And then, of course, they'd be miserable because there's good employment numbers, which means that the rates are going to go faster and everybody will be unhappy. So, but to be honest, I don't think we'll see a lot out of it. I'm looking more if the Greek government can get their act together and just be part of the process instead of part of the problem.
And aside from Greece and non-farms, anything else catching your eye this week, or is that pretty much the lion's share of it?
I will be surprised if the S&P 500, unless something out of left field shows up, is more than 8 handles from the current price of 2111. Right now, I will be surprised.
There you go. So you're saying you're selling strangles and or straddles going into the end of the week here.
And I'm not even going to be here Thursday and Friday, so that's how much
That's how confident you are. hedging negative gamma. Who needs to be around for that?
As long as it's not expiring on Friday, I don't care.
We all learned in the go-go 90s, you could just sell everything and go away, and it worked, right?
It does, because you had that big, huge rally, and then it all came right back down again. It's just that sticky part in between.
Thank you for that, Mr. Rock Lobster. Uncle Mike, what are you watching for the rest of this week? What is catching your eye over there at RCM Wealth Advisors?
All right, besides all the garbage that you guys keep IMing me, well, I'm kind of with Andrew on this. I really don't see a lot of movement coming this week. It'd be nice to maybe see a little movement on Friday with non-farm. It'd be a good thing, I guess. But for right now, I think that the main thing that I'm watching is bonds. We've come down a little bit on TLT, for example. It had a little bit of a pop, but I want to see the next leg of this bearish bond rally, or this downturn in the bonds, and see where we go from there. That's probably the main thing that I'm watching, with which Andrew did not mention.
There you go. So a few things to pay attention to, listeners, this week, in addition to all of the really fun, unusual activity we highlighted. Remember, send us in your ideas, what you think they're up to. One would be a scenario where you would buy a $2 stock and then pay 10% of it to hedge. Why would you do that? Give us all those ideas and much more. But unfortunately, it's all the time we have for the Around the Block segments. Also all the time we have for this episode of the aforementioned option block. But before we go, as always, really quickly, let me check in with each of my cohorts here on the old All-Star panel. See what they have cooking that may interest you. Mr. RL, Mr. Rock Lobster, we'll start with you. What is cooking in the hinterlands, known as the Giovinazzi lands of Maine, and what is cooking in the land of the pit?
The land of the pit we have our very, very, very popular option boot camp. We got that name from somebody I know, but I can't quite remember who it was. It escapes me right now.
I'll be expecting my check forthwith, sir.
It is the boot camp is 9 hours of intense option education, and it frankly generates a ton of clients for us because they actually learn something. And it helps people understand where all this premium and options come from and how that you can position it, and essentially how to help yourself make money in all kinds of market conditions. And that's what options give you. It gives you choices. So that starts June 8th, Thursday. It's Wednesday. It's going to be Wednesday, Thursday, and Friday of the second week of June. Wednesday, Thursday, Saturday, second.
All right. And Uncle Mike, any boot camps or any other stolen titles? Maybe you have a volatility views going on over there at RCM I don't know about?
No stolen titles whatsoever, but we are still calling all hedge funds or people with accounts between the $1 to $2 million level. If you are a self-directed trader and trading your own accounts at RCM, we have north of $100 million under management, so we get very preferred commission rates at both TD Ameritrade as well as Interactive Brokers. If it's something with which you'd like to trade off of our volume, give me a call. I can talk to you about doing that, and we'll see if it makes sense for you to do. 312-212-3531.
Thank you for that, Uncle Mike. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. We'll get to those on Thursday, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.